Good morning, good evening, good whatever time it is you are listening to this. I hope you are having a good one. I apologize I haven't been uploading the last few days. I haven't been feeling very well. I've this weird throat cold that I'm trying to get over. With that said, let's go ahead and jump straight into the data. If it'll pull up, there we go. Alright, so tomorrow we have the important PCE data. That'll drops in the pre-market at 8:30. We also have the personal spending, which right now that's going to be a fairly decent data set. The forecast has that higher. The previous was at a negative. I still assume this to be fairly low, especially seeing how the consumer confidence report was down quite a bit, but that's just a revision. Um, let's see, and then at 10 a.m., so 30 minutes after the open, we have a bunch of Michigan data sets, so the consumer expectations, inflation expectations, stuff like that. Then 11:30, we have the Atlanta Fed GDP. Then some supervisor Barr speaks at 12:15. So basically, the important stuff's going to be uh, in the pre-market, and then at 10 a.m. This Atlanta Fed GDP can swing things a little bit. I don't really expect Chair Barr sw to swing the market too much, so it's really going to be the morning and this 10 a.m. data sets. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's go ahead and jump straight into the TA. And I'm not going to go super in detail tonight because I am not feeling well. I apologize. So with that said, let's go ahead and cover the moving averages and then the Bollingers. So the 5 MA is currently at 569.84. It's very likely going to open at 568.50 since we closed at 567.08. That 5 MA is going to pull downward slightly. Yeah, I want to expand this just so you can see this a little clearer. So we pulled over the 20 MA. As you can see with that 5 MA, we aren't pulling over the 200 MA yet. We have the 10 MA starting to pull up. So let me get into the other levels really quick, and then I'll discuss what I think is going to happen. Anyway, we had the 10 mile at 566.43, so it's under the 20 mile. The 20 mile is at 568.02. We have the upper Bollinger, so way up here, at 588.80, and that's going to continue pulling downward as the 20 mile pulls down. Um, and this lower Bollinger is going to continue pulling upward towards us as that happens. So the lower Bollinger's at 547.24. It's not completely out of range. As you can see, we did hit the 548 before, so it's kind of pricing that in a little more. So it's you're seeing heavy consolidation here, and very likely what's going to happen over the next few sessions is we're going to see the 10 MA pull over the 20 MA. We're going to see the 5 MA pull over the 200 MA, and then it's everything is just slowly going to be pulling up over that 200 level. As we pull the 5 mile up, that's gonna, test above, test below, and then the 10 mile is gonna start pulling up, and then that's gonna test above, test below, and then the 20 mile is gonna start pulling up, and rinse and repeat. Um, I still see this as bullish structure. I know many are looking at this as this giant inverse cup, and let me just hide that for a second. So there's still this massive 536 level that I've been talking about for a few weeks, and I don't want to pull up the drawings, but I'm going to anyway. It's going to show some ugly boxes, but just kind of ignore those for a moment. But it's this big line down here, and what many people are expecting is that we are going to essentially have this inverse cup form and then this handle form, whether we continue pulling up or pull down. Um, you know, that's what many are expecting. I don't really expect it to reject right here, but I will go into the hourly chart to show why. But I do see what many are looking at, which could be like this potential head and shoulders, which of course that's going to be a bearish structure. But we really need to break down into this lower liquidity area if we're going to start looking at that as like a bearish structure. And essentially that's what we need to look for at this level. And let me just pull those back, go to the hourly chart. This is going to look really ugly for a moment. I apologize, but bear with me. Now, today we barely hit that lower liquidity level, as you can see, and I hope everyone tries to set this up on their own charts in some way or some form, because these liquidity levels are really key. But as you can see here, I don't know why that's pulling up that way. As you can see here, um, we're still not breaking down into this lower liquidity zone yet. We had a candle downward towards that for a very brief period, but we're just testing that area. And I talked about this last week or last video, I don't remember, but there's this large um, inverse head and shoulders here. Okay, and very likely what we were going to see is the bottom of this liquidity zone tested, and then we start seeing it pull upward. Okay, because as you can see, of course it's not pulling up all the way. Okay, that's not showing right. Um, let's go to the daily chart. This liquidity zone covers the entire Trump rally, and it's supposed to be all the way back there. But I think when I was extending it earlier, it was actually just pulling it from the left. So let me see that now. Sorry, everybody, if you could just be patient with me for one moment. I don't want to have to edit this out. Okay, there we go. Alright, so this is the liquidity zone from, the Trump rally. And this is the 4-hour chart just so that I could easily show you guys. Now, we have this left shoulder built here, and you could see by the structure right here. And this was that 5-mod test I talked about a few videos back, where it tested the 5-mod and then we broke structure. Instead of breaking upward, we kind of just broke structure and headed down. So this right here is its own structure, and kind of think of this like a math problem. I know that's not going to make a lot of sense. I apologize. Just don't have a lot of time to explain it tonight. So we're working on this formula right now, essentially. So um, that's kind of what I'm looking for. I'm looking for more bullish structure in here, and we do have, an inverse head and shoulders starting to form. Very likely we're going to see this lower bounce tested a little further, but if not, then we do have this head and shoulders, or this inverse head and shoulders kind of forming right here. And while it's not a huge candle of liquidity right there, it is enough to say we broke into this liquidity zone, we grabbed liquidity, and now we can continue heading upward. So that's sort of my expectation is we're going to fill this area upward and form a handle and, start heading upward from there. If not, then we're going to see this continue breaking down. Um, this is somewhat of an inverse cup here. So look for that to break into this liquidity zone. And this liquidity zone basically is right at the 566.50. So just keep that level in mind. With that said, we have really heavy consolidation in the moving averages right now. So this whole area between like the 566 to 571 is pretty huge in terms of like the market needing to test that area. So um just be aware of that. there might be a lot of chop over the next few sessions, even though we do have like a really important data set in the morning, which is, that PCE. That's the Fed's main data set over, like the beige book or something like that. So with that said, we'll just pay attention to the data in the pre-market and then we'll see where the market's going from there. If it's starting to break down to this liquidity zone, then, we can hedge at this area really well. And once we hedge here, um, it's either we're heading upward or we're breaking back down. So, very good area to lock in some longer contracts, and I highly suggest doing so, especially when we have, that other bit of data coming out at 10 a.m. So, with that said, trade safe, everybody. I hope everybody has a good day, good night, and a great weekend. And I will talk to you in the next one.